Welcome to the gallery. Is where knowledge knows no bounds.
Welcome back to our channel. In today's video, we'll be diving deep into the world of income tax and exploring different sections that offer incredible tax saving options. Most of us are familiar with Section 80C, but did you know there's more to it than meets the eye? Stick around till the end, and we promise you'll leave with valuable insights to save on your taxes effectively. Before we get into the nitty-gritty of tax-saving sections, let's understand the two tax regimes, the old and the new. From pre-2020-21, individuals can file taxes under either regime. The old regime allows for concessions through investments, while the new regime restricts deductions and exemptions. However, regardless of the regime, if your net taxable income is below 5 lakhs, you can avail of a rebate, meaning you pay no tax. Isn't that great? Section 80C. Now, let's talk about the most commonly used tax-saving section, Section 80C. By investing or spending up to 1.5 lakhs in specified avenues, you can save on taxes significantly. The illustration below highlights some of the common investment options under this section, like life insurance premium, public provident fund, and more. We made a specific video on Section 80C, kindly check the end screen. Section 80CCD. It allows further tax deduction by investing in National Pension Scheme or Atal Pension Yojana. Section 80CCD has three subsections that allow a total deduction of 200,000 rupees for individuals. 1. Section 80CCD. 1. As per the provisions of this section, subscribers can claim a deduction for their contributions to the National Pension Scheme. This provision applies to all individuals investing in the scheme, including self-employed individuals, government, public and private sector employees. The provisions are also applicable to senior citizens. The maximum deduction allowed under this section is 150,000 rupees. There is a limit for the maximum deduction: 10% of the salary in the case of a salaried individual and 20% in the case of a self-employed individual. 2. Section 80CCD. 1B. This section provides an additional deduction of up to 50,000 rupees, in addition to 150,000 rupees of Section 80CCD. 1. 3. Section 80CCD. 2. This deduction is available on the employer's contribution to an employee S-tier INPS account. Employers can make contributions to the NPS account in addition to EPF and PPF contributions. The contribution made by the employer can be equal to or higher than the employee's contribution. However, a maximum of 10% contribution of the basic salary plus DNS allowance, if applicable, is allowed under this section. It is important to mention here that effective pre-2020-21, the employer's contribution of more than 7.5 lakh rupees into retirement funds, EPF, NPS, superannuation funds will be taxable in the hands of the employee. The interest earned on such a contribution will also be taxed in the hands of the employee. Section 80DIT allows a deduction for premium paid on a health insurance policy for self, spouse and dependent children, but the maximum cap under this section is 25,000 rupees of premium paid. Additionally, one can avail another 25,000 rupees for the premium paid for health insurance of parents. If your parents are senior citizens, then this maximum amount will go up to 50,000 rupees. Therefore, if your parents are senior citizens, you can avail of a deduction on up to 75,000 rupees of premium paid. If both the taxpayer and the parents are senior citizens, then this amount will go up to 100,000 rupees. Please note that if your senior citizen parents are not covered under any health insurance policy, then the medical expenditure incurred on them is also deductible under Section 80D. The maximum amount under such deduction is 50,000 rupees. Section 80DD and Section 80DDB. In addition to Section 80D, the sections also include medical expenses. However, to avail deduction under these sections, the expenditure has to be made for disabled and/or specified persons. Section 80DD offers a deduction for medical expenses incurred for dependent disabled persons, which may include spouse, children, parents and siblings. The amount of deduction depends on whether the dependent is disabled or severely disabled. It allows a maximum deduction of 75,000 rupees if the dependent is 40% disabled. Disability of 80% or more is considered a severe disability and a maximum deduction of 1.25 lakh rupees is allowed. Section 80DDB allows a deduction for medical expenses incurred for treatment of specified illnesses such as cancer, chronic kidney disease, etc. It can be claimed on self or dependent. A maximum deduction of 40,000 rupees is allowed for individuals below 60 years of age. For individuals above 60 years of age, the maximum deduction allowed is up to 1 lakh rupees. Below is a list of some of the diseases mentioned. The entire list can be found in the Income Tax Act. Malignant cancer, chronic renal failure. Neurological diseases, with disability levels of 40% and more, and covers career, motor neuron disease, dementia, ataxia, aphasia, Parkinson's disease, dystonia musculorum deformans, and hemibilismus. AIDS-acquired immunodeficiency syndrome, hematological disorders like hemophilia or thalassemia. To avail of the tax benefit, the assessed has to provide proof of the need for medical treatment and proof that treatment has been undertaken. Section 80U. Individuals with a disability of 40% and above can claim tax benefits under this section. The maximum amount of deduction is the same as that under Section 80DD. Please note, you can claim deduction only under one of the schemes between 80U and 80DD. They cannot be claimed simultaneously. Under 80U, the deduction is claimed by the disabled individual, whereas under Section 80DD, deductions are claimed for the dependent for whom the expenses are incurred. Section 24. We mentioned that under Section 80C, one can avail deduction on home loan principal repayment. Under Section 24, one can avail benefit on the interest paid on a home loan during a financial year. The maximum amount that can be claimed is 2 lakh rupees. This deduction is allowed only for a loan taken on a self-occupied property. In case you are paying a home loan for an under-construction property, this benefit is available after the possession of the house, provided it happens within 5 years. The interest paid during the construction period can be accumulated and claimed after the possession of the house in 5 equal installments. Section 80E. Individuals who have bought a house under the affordable housing segment can claim an additional tax benefit on interest up to a maximum of 1.5 lakh rupees. This is over and above the deduction available under Section 24 mentioned above. However, certain conditions have to be satisfied before claiming tax benefits under Section 80EA. Some of these conditions are: 1. This scheme is only applicable for first-time home buyers. The individual should not own any other property. 2. The home loan should be taken by the individual from a financial institution or a housing company for buying a residential house property. 3. The individual should not be eligible to claim tax deduction under Section 80EE.4. The stamp duty value of the purchased property should be 0.45 lakh rupees or less. 5. The maximum amount of deduction permitted under this section is 1.5 lakh rupees in an assessment year. Section 80. Under this section, individuals contributing to any charity can claim tax benefits. This is applicable only for donations to specified government notified funds. Up to 100% of the donation amount can be deducted from your gross total income, thus reducing your total taxable income. Section 80 TTAWE. All earn interest on balances kept in savings accounts and post offices, right? This interest income has to be shown under the head, Income from Other Sources, while filing the income tax. However, up to 10,000 of income filed under this head can be claimed as a deduction from the gross total income under Section 8 OTTA. Please note, senior citizens cannot claim deduction under this section. However, they are eligible for deduction under Section 8 OTERATERABYTE. Section 80 TTB. This section is meant for senior citizens, aged 60 years and above. They can claim a total maximum deduction of 50,000 from the gross total income. The deduction can be claimed on income earned from specified sources such as savings accounts, fixed deposits, senior citizen savings accounts and others. Section 80E. Individuals paying interest on education loans can claim deduction under this section. There is no maximum limit on the amount that can be claimed. The interest is deducted from the gross total income of the individual in a financial year. Please note, 1. Section 80E is applicable only for individuals, and not for HUFs. 2. The benefit can be claimed for a maximum of 8 years from the starting date of the loan repayment. Apart from these deductions, an individual is also eligible for exemptions under the old tax regime. And there you have it, a comprehensive guide to various income tax sections for tax savings. Remember, understanding these sections can make a significant difference in your tax liability, so don't overlook them. Always consult a financial advisor if needed and plan your investments wisely. If you found this video helpful, give it a thumbs up and share it with your friends. And don't forget to subscribe to our channel for more informative content like this. Thank you for watching, and we'll see you in the next video. Happy saving and happy filing.